My name's Liebenberg, and I'm the Chief Executive Officer of YellowCake PLC. YellowCake was set up to provide investors with the means of investing in the uranium commodity. We only own physical uranium, so we don't have any of the operating risks associated with developers, explorers, and miners. It's a difficult commodity to get pure exposure to. So what we've done is we've effectively set up an ETF, but in a corporate vehicle. A key feature of the YellowCake setup is the contract that we have with Kazatomprom. This contract was put in place when we IPO'd in 2018. It was a 10-year framework agreement, and it allows us to purchase up to $100 million of uranium per annum from Kazatomprom, which is the world's largest and lowest cost producer of uranium. This option is attractive to us because we can execute all of it in one go. We can do it in multiple tranches or not at all. It allows us to buy the $100 million essentially at the spot price. The way the contract works is it's priced at the average of the last two quoted weekly prices from TradeTech and UXC. And in a market that's not that deep and liquid, the ability to buy $100 million of uranium at the spot price, we think is a very attractive option. The deal with Kazatomprom is such that the material is delivered to the Cameco facility in Canada, and that's where we take ownership of the material. We don't involve ourselves in the logistics chain of getting the material to Canada. Most of our material is stored at the Cameco facility in Canada, and we have some material stored at the Orano facility in France. We have a low-cost structure utilizing an outsourced business model. We have outsourced our administration, IT, accounting, and some of the transactional activities related to the purchase and storage of uranium. And we target an annual operating cost of less than 1% of NAV, and at the moment we're running comfortably underneath that. Next slide, please, Gracie. If you look at the YellowCake balance sheet, on a pro forma basis, we essentially own close to 19 million pounds of uranium. When I say pro forma, we are due a million-pound delivery from Kazatomprom at the end of this month. That will take all the owned uranium that we have up to almost 19 million pounds. And we have around $16 million of cash on hand. Our activities are all equity financed, so we don't have any debt on the balance sheet. We don't enter into any hedges. Next slide, please, Gracie. Just a quick corporate summary. We are listed on the AIM segment of the London Stock Exchange. We have a blue chip shareholder register. About 50% of our share register is North American. When we IPO'd in 2018, that was around a quarter. So through the 3 equity raises we did last year, we saw significant interest coming out of North America, and that's grown our share register to over 50% North American. We're about a third UK, and then the balance is the rest of the world. When we IPO'd in 2018, we didn't do a retail offering. Currently, we're almost 23% retail owned. So that's been very successful for us, pitching to the retail folk and the retail platforms. And our liquidity has increased dramatically. At the time of the IPO, we traded around 200,000 shares a day, and at the moment we're trading probably 1.5 million shares a day. And there's some days that we trade north of 5 million shares. Next slide, please. So fortunately, the co-presenters so far have steered away from talking about the macro sector. I guess for us, that is the important feature of why we set YellowCake up. When we set it up in 2018, we looked at supply and demand fundamentals, and we looked at where the uranium price was. And we convinced ourselves that we were closer to the bottom of the cycle than the top of the cycle. And I think if we look at the story as it's unfolded since 2018, I would argue that the demand side has become better, and therefore we think that the story is increasingly compelling. Nuclear is being recognized because of its stable, low carbon baseload characteristics. In the adoption of these carbon neutral goals, we think that nuclear now is being valued as a contributing technology towards a low carbon future. In terms of the cost of building energy infrastructure, we see increasingly that governments are recognizing the value of the infrastructure that's already built, and I'll talk a little later about the life extensions that are going around the world. And I think a lot changed when Russia invaded Ukraine, particularly for this sector. The focus now on energy diversification and energy security is just another positive for the uranium demand side. Next slide, please. If I just look at the existing development plans, and China is obviously a key feature here. At the time of Fukushima, China had 17 operating reactors. Today they have around 52, 53 operating reactors. The 14th five-year plan aims to take the nuclear capacity from 50 gigawatts to 70 gigawatts, and to around 110 gigawatts by 2030 and 200 gigawatts by 2035. If you look at a recent Bloomberg report article. I think China has learned how to build reactors on an industrial scale. They can build these reactors in about 6 years. And the scale of what they aim to build over the next 10 to 15 years is significant. But it's not only China. We're seeing that India are pushing forward hard on their program. They've recently approved another 10 reactors to start construction over the next 3 years. And that will take their reactors under construction to 18 years. We have seen a 4-reactor program in the UAE. 2 are already online, the 3rd is being fueled, and the 4th is not that far away. And even here in the UK, we're seeing the government talking about plans to develop a nuclear program. Next slide, please. Next slide, please. Sorry, you skipped. Then just quickly on the existing nuclear capacity, we've seen in the US particularly where there's a desire to push out the operating lives of the plants. We've seen life extensions from 40 years to 60 years. There's now talk of life extensions to 80 years. But again, it's not just the US. In Belgium recently, they overturned the decision to shut down their 2 operating reactors and extend that through to 2035. In France, there's a whole program looking at the extension of existing facilities beyond the 40-year lifespan. The new administration in South Korea has overturned the previous decisions to wind down the nuclear program, so there are life extensions there and looking at growing the capacity base. And again, in the UK, there's a strong desire to build out the program into the future. Next slide, please. There's just one element of the fuel chain that I want to touch on that's getting a lot of attention recently, related specifically to the Russian invasion of Ukraine. The fuel cycle in nuclear is a long fuel cycle. It's typically 18 to 24 months, where you go from mining, conversion, enrichment, fuel fabrication. Russia is not a big contributor to the uranium oxide part of the fuel chain, but in conversion and enrichment, it is a significant player. It's something like 35% of conversion capacity and 45% of global enrichment capacity. And we've seen that had a major impact on how utilities are thinking about their contracting strategies. When we kicked off this year, we saw a lot of activity in the uranium oxide part of the value chain. But recently, I think the implications of the Russian invasion and whether nuclear gets sanctioned or not sanctioned has caused a lot of uncertainty and a lot of volatility. If we go to the next slide, please. I think that's played out in the price of both the enrichment SWU and also the conversion price, where we've seen the prices jump significantly as utilities look to pivot away from future Russian supply. But the issue is that new capacity is going to take time to build. It may take up to 5 years to build enrichment capacity if the owners of that capacity can get contracts at decent prices. So I think we are in for a period of volatility in terms of the near-term uranium price. We've seen that. We've seen the uranium price go up to 63, come back down to 45, back up again. But I think, if we look out longer term, next slide, please, Tracy, my final slide. I think the story is becoming increasingly compelling. We are seeing, the green ambitions being embraced by governments around the country, around the world. And we've seen the focus now on energy security, energy diversity, and energy availability. So, we strongly believe that the demand side of nuclear has only got better, certainly since we IPO'd in 2018. And against that backdrop, YellowCake provides a keen way to play the uranium commodity exposure. We have a low-cost structure. We don't have any of the operating risks of a typical mining company, and we are a liquid investment option. So with that, I'd like to wrap up. Thank you, David.
Okay, thank you very much, Andre.